Hey there, it is Phil Ratcliff, and thank you so much for joining in to another one of our video broadcasts. Today, we're going to go over a up and coming. It seems for a long time now, but most people still don't, I think, totally have their minds wrapped around it. We're going to go over cryptocurrency, what it is it an investment, is it a currency, what is its capability in the future, all these things because it is something that you should know about. It is a new technology that's going to be very important. It is already, and I think we're going to see more and more of it into the future. So love to hear your feedback. So as always, as we're going through, please feel free to comment, give us feedback. This is not meant to be a super in-depth technical webcast about cryptocurrency. It's from an investment advisor's perspective to help you understand a little bit what it is, the role that it plays, how it may evolve, and possibly for like a very small sliver of people, speculatively be an investment. But again, is not meant to be investment advice that everyone should go out and invest in it. It is not appropriate for most people. So I will reiterate that at the end. So let's dig into it. What is cryptocurrency? I will have to say I've enjoyed these two websites as a good information about cryptocurrency and keeping up with events and learning, etc. This Cointelegraph and then also CoinDesk. I actually subscribe to the CoinDesk and the emails that they send out for updates and whatso. So again, we'll put the links to these websites so that you can access them more easily. But this is a really good breakdown if you want to read in, just a few minutes to kind of give you an update about, what cryptocurrency is, where it came from, some of the history. There's a couple embedded videos here, but really cryptocurrency kind of evolved over time as like online ability to have digital cash, right? I mean, it is basically almost what its name is. I think it's evolved way past that, and we're going to talk about that. But of course, you can read through the history and how it tried to start kind of doing the same thing that banks and credit cards and stuff did, having a centralized place that kept control of things. But of course, without huge monetary backing and wherewithal, a lot of them failed. And of course, once that third party validator failed, then of course, the currency couldn't stand up. Eventually, you can see Satoshi Nakamoto made Bitcoin, and it was revolutionary in the fact that it's decentralized. There is no centralized thing, and so participants in the marketplace are doing it themselves, either people that own or buy or sell, or the miners that facilitate the more complex and heavy resource intensive job of validating transactions. So you could kind of read through the history. The Bitcoin was first, and then of course since then now we're up to thousands of cryptocurrencies, and now the regulators and the governments are getting involved, and of course they're afraid that is this could this possibly compete with or eclipse our local currencies, which of course most governments have a very big vested interest in, because of course they can, even though they probably won't admit to the overt manipulation of currency. And there's a lot of people that complain about, they're just going to print money or what so, right? So this is a counter to that, really. You could have a decentralized, almost democratized alternative that governments couldn't manipulate. Now, of course, government's very powerful. They could change the laws or in certain ways manipulate these as well, just from the amount of money that they control. But again, it's an awesome, interesting concept. And you can kind of read through here. You can invest in it. I'd say, again, as I mentioned at the beginning, it's very speculative. For example, one of a good example, Link, and I'm going to go over some of the different ones inside of here, but where it's up to now versus where it was up in March, if it's up a lot. But if you were to buy it right now and it just corrected back to where it was less than 5 months ago, you would lose over 90% of everything you put into there. Okay, so I mean, the level of volatility that's in the crypto market right now is huge. And since there are so many cryptocurrencies, especially for like initial coin offerings when they first come out, there's a lot of celebrities getting behind and backing things. There's a lot of fraud there too. So you really got to be careful. It's not for the faint of heart. It is very speculative, and it is pretty. Uh, there's still a decent amount of fraud out there. So I would be very careful if I were you. So I would do a lot of due diligence, a lot of research, maybe even find someone to help you that's pretty knowledgeable in this area to make sure that you minimize those pitfalls. I don't think you could get rid of them completely. Mining, if you've ever seen us or been around us, like I personally mine, Rebel as a company mines. Sometimes when you come here, if it's profitable, depending on what electrical rates are and what the underlying algorithm that we're mining is, sometimes you'll see our computers mining and the noise that comes from it. And especially in the winter, it provides probably over 50% of our heating for the building. And at my house, I would say upwards of 70 to 90%. But mining generally in the decentralized network is when people want to make a transaction or what so, then someone has to validate that. And the simple way of explaining it is it's like a cryptographic puzzle. And so when something happens, all these different miners will be competing to solve that equation first. And if they do, then they get rewarded for it. Either reward or transaction fees. And there are different ways to do this. Again, this is not supposed to be very technical because I'm not trying to turn people off to just get in the gist of cryptocurrency. But, proof of work and proof of stake and, some of the different Ethereum coins and what so that are coming out have all kinds of different perspectives on how to do it faster, solve some of the supply and demand, etc. It's really getting kind of cool. But that's what miners are. Very important to the network and the functionality of cryptocurrency. Lots of places are accepting it for payment now. I would say a lot of the more progressive, I think even Apple and Google will take it. And a lot of times, I mean, we take it, we don't like put it on our website to where you can just like do it. But if somebody wants to pay us that way, we have wallets. We own lots of different types of cryptocurrency, and that's fine with us as well too. So it will probably become a more and more important payment method. I would say the most important thing about cryptocurrency, and cryptocurrency is just a name that's really stuck around now, but it's built off the technology of blockchain, okay? And that's what really was created with Bitcoin, the most important technological feature. And so everything I think will continue to be called cryptocurrency, but there's so many technological things advancements that are going to come out of this that are going to evolve, whether it be transactions, whether it be running certain online things efficiently and securely. There's so many opportunities that this technology can make breakthroughs. And so, again, you can read through this article. I'm not going to go too much through it, but you can see some of the different ones here, and I'm going to go through a few of them when we get down to talking about wallets. But of course, Bitcoin was the first. Its blockchain is so long now that it's super duper strong, and so that's why you see a lot of other companies building other projects on top of it because of the strength of the encryption now. But it is very heavy, it's very slow, and so personally, I'm not a big Bitcoin fan. But on the flip side, there are so many buyers of it, and the market's so thick now. I think it's about 4 times the market cap of just about anything else. But Ethereum is probably the most exciting, and most of the other cryptocurrencies are built off of Ethereum, and so it probably is the most important now. Cryptocurrency, but to build actual like practical applications off of it to solve real world problems. Litecoin as well was made as kind of an alternative to Bitcoin that's way faster. I have to say that's probably my preferred way of getting, out of fiat into crypto. is through Litecoin, but you can do it multiple different ways. We'll get into that in just a little bit. And so again, that Cointelegraph, CoinDesk, if you really want to learn more, I mean, there's lots of things on here. You can see like this one's just talking about Ethereum and how mining works, and what are the different things that they're doing from proof of work to proof of stake, and then how will things change in the future, what's important about it, etc. Okay, so check these things out. They're good resources. I'd say one of the most important technologies that are coming off of cryptocurrency are smart contracts. Okay, so smart contracts are basically, I guess if you really wanted to break it down, almost like encrypted, standardized, if this then that, and then you can make them legal, you can make them company-wise, etc. So I think one of the best practical applications of this that I have heard, and it will probably take a long time to come around just because of the legality of how everything's organized, and people that have stakes in this game are not going to let this go very easily. But just think about when you buy or sell a house. I mean, the average person is paying somewhere between 6 to 10% in transaction costs between title companies and real estate agents and intermediaries like the banks, etc. It's crazy. I mean, is there anything else really that you pay 10%, to buy or sell, really? And so, and why? Because we don't trust each other, and that's a lot of money. It's a huge purchase. And so since we don't trust each other, we've got to have all these intermediaries in there to guarantee things like the title company, to make sure that, that person really owns this and there's not liens against it. And, when we look at somebody to hold the money in trust until they sign and the title actually gets transferred over and we have it, and the paperwork's like this big. But a smart contract, basically could do much of the same thing. And instead of, 10%, maybe we can get it down to 1 to 2. And most of that might go to real estate agents or what, so that are actually the main person, like really working for us or should be working for us, to get your house seen and to get it staged and to get multiple offers to, validate what they're charging us. But if we could do that, then you have a smart contract that just says, all right, I want to buy this. And through that, it can validate that the title's there and can search. And once the guidelines are, prove true, there's no liens against this person actually owns this, then the buyer puts up the money and it goes into an escrow account, and the smart contract goes, check, the right of money is there. They can't take it back now. I've got it in an escrow. I've got this title. Since all the conditions are met, I will transfer it. Boom. But this was just all automated in this encrypted framework. And once everybody completed their parts, then boom, everything was traded. And then you can almost, it sounds bad, but you can have like a trustless transaction go through to where both people feel comfortable that one or the other couldn't rip them off, so to say, right? So that's an example of a smart contract, right? And we could do that with lots of different things. I mean, eventually you could have AIs running companies based off smart contracts or using them on top of being, kind of ruled by them to a certain degree. And you could have very efficient, non-biased, more egalitarian management of companies. So it's very interesting. I mean, I've read a couple of books about this, and eventually it will be very difficult for a human-run company to compete with that, with the longevity, the low cost, the efficiency, the and you know what, probably even more humanitarian in terms of, if we make the rules to say, yeah, you take care of workers, you take care of stakeholders, not just shareholders, right? We would write the rules for that. So anyways, very important. Smart contracts are, I think, the main thing that's going to change the world out of blockchain, which was the primary technology that cryptocurrency is built off of. So again, everything's probably going to get called cryptocurrency because it's like cryptocurrency mania, but I would say most of these Ethereum-based tokens that you're seeing out there are some kind of smart contract or that type of technology, and it's really exciting. So, check through these things, read it for yourself. But that is what the buzz is about. So let's get into practical, okay? So when we think about the practical side of things, we say, all right, so if I wanted to own some cryptocurrency, how could I do it? So first of all, you would have to be able to get money into some kind of cryptocurrency, right? And that is easier now than it used to be in the past. In the past, I mean, when things first started, it was just like you had to mine it or what so, or you had to get some from somebody that already had some, or what so, or you're not in the game. And so now there are exchanges that make that easier. So you may have heard of Gemini or Coinbase. Those are probably the two biggest ones if you're US based. So Coinbase is probably the biggest. I'm not a big fan of Coinbase. I've had a couple bad experiences with them, but they are the biggest. I think they're integrating with multiple of the major banks. I know my credit union, USAA, was one of the first to integrate with them. It even shows up inside of my USAA when I sign in there, like all my different wallets. But again, I like Gemini. They've been a much better company to work with, etc. So what this is you can connect this to your checking or savings account or what's so, and then you can move money into like this brokerage account that's for cryptocurrency. And then you can use it like a brokerage account. So if you are familiar with being able to buy and sell ETFs or mutual funds or stocks or what's so, then you can put in orders to say, hey, I want to buy Litecoin or Bitcoin or you can see they don't do all of them, okay, but they are adding more and more. So Ethereum, Chainlink is even on here now, okay. So from here, and you don't have to just say I'll buy it at whatever the price is, because like what did we talk about before? I mean, man, you can have intraday swings of 20 to 90%. Okay, so throwing an order at the market may not necessarily be smart. So you probably want to get a better trading account. I think with Gemini, it used to be this way automatically, but now you have to request to say I want an active trader. And generally, I'm not a big fan of active trading. Obviously, I'm a long-term buy and hold, buy things on sale, kind of like a Warren Buffett, Benjamin Graham investor. But still, I would use limit orders if I were you to make sure that you don't get caught on one of those big swings when you're buying them. From there, if you mainly just want to deal in the higher market cap, and so here's what we're talking about. I mean, this is a really good site if you just want to keep track of things. It's just called prices.org. You can check out all the different cryptocurrencies, and then you can rank them by whatever you want. Right here, they're ranked by market cap. So you can see the biggest is Bitcoin, and second is Ethereum. This XRP is one called Ripple. And so you can kind of see what's going on with the prices. You can pull up a chart like, hey, I was telling you about that Chainlink, right? So let's look at its chart right here, and you can kind of see what's going on with it. And it defaults to the short term, right? Even in the short term, you can see like, just in the last few days, it's gone from 12 up to a high of like 18, right? So that's a huge swing just in a couple days, like 30%. If we want to look at the whole year here, we can see like all the way up to 18, and just back in March it was down at like $1.50, right? Woo. So it could touch. So again, not for the faint of heart on some of this stuff. Okay, be careful with what you're doing. So anyways, you put in your limit order. Now you've got stuff in crypto. So like I said, kind of my favorite thing is I like to deal in Litecoin. Bitcoin is the most traded. But again, I like to move my stuff from something like this into a wallet. And my favorite wallet is Exodus. And sometimes when I'm working with Bitcoin and when I mine, I always get paid in Bitcoin. And it can take, a half a day to as long as 2 days for stuff to move from one place to another. I just can't deal with that, like if you want to like move it somewhere, or say you wanted to like exchange it for something. So if you're going to hold something that has the most money in it, especially from institutions and what's so, and you're going to hold it for a year or two or longer, then Bitcoin's not bad. They say like Bitcoin is like digital gold, because there is the way that it was built is that it has a set supply limit. There's only so much of it, right? But so that also limits its application to what you can do with it, or to be used as a medium of exchange in general for a lot of people. But again, maybe it could be a good, long-term investment, kind of as a long-term commodity type thing. But again, not my favorite. So once you got your money from fiat into crypto, then from there, you can kind of change around to wherever you want. I really like this wallet. Wallets are where you can keep your cryptocurrency, and a lot of times you keep them on a local machine. And if you keep them on a local machine, especially if you use some kind of hard thing, I think the one that they're tied to is called Tezos, then it's super duper secure. I mean, if you want to get like paranoid secure, then there it is, Trezor. Then you only use it on a computer that isn't connected to your regular network that you only use for the cryptocurrency. So if you are going to keep tens to hundreds of thousands or even millions of dollars in crypto, then I would recommend that. Buy a laptop only for it. Only use a VPN on a network that's not connected to your regular network. And then and there are more steps than that. You can read about getting high security, but this is probably the more secure way to go. The reason I like it though is that it's tied to hundreds of cryptocurrencies. So you can trade to a lot of different ones. And kind of my philosophy is on this, it is kind of a speculative type thing, but I believe in a lot of the technologies going forward are actually going to solve problems. And so what I do is read about the cryptocurrencies and say, hey, I think this is a real world problem that this cryptocurrency has a shot at solving. And then I diversify between those based on that. And so, when we look at that, let me pull this over so you guys can see. When we look at that here, then I can send or receive to somebody, or I can exchange from one to another. But I like looking at this just so you can see it, to just get a really short explanation of what each one is. So Aragon is one that's like crazy, gone up high, kind of like that link I was telling you about before, the last just 3 weeks. But what it does is it lets people form organizations like nonprofits or companies or and tries to do that in a way that's cross-border and hard to censor, etc. So that's pretty cool. This Augur, which is REP, is kind of its ticker, if you would, is an Ethereum-based token, and most of these are Ethereum-based tokens that lets people like hedge, or it's like a prediction market type thing, but it's a cryptocurrency. So that's pretty cool. The Chainlink, which we were looking at before, this is like one of the main smart contracts one, right? So very cool application of technology here. And then let's see, one that I just like because I know history. So on here, let me see if I can find it. They're not organized very well inside of here. Is basic attention token. There it is. And really, when the internet was invented, there was this big controversy saying, should we do advertisements and like that, or should we do micropayments for like advertisers and even for people to pay people to view their web pages? And of course, we know what happened is we've got a bunch of ads and that's taken over the internet. Well, basic attention token is the attempt to try to do the micropayments. And frankly, it just didn't work back then because there was no way to do it. And now there is. And so there are all these cool things out there that are being developed that are going to solve potentially a lot of these problems. And so like that XRP, that Ripple, is made to like try to produce a solution to where different banks can communicate and transfer money, etc. So I mean, this awesome solution. To reduce costs and the extra things that get added that make things expensive to us, just like we were talking about the real estate 10% transaction cost. It's crazy, So yeah, I mean, if you do something like this, I mean, you could do it really small, just put a little bit in there. I recommend this to people that are interested in it, just some small amount that isn't a big deal to you, just to have some skin in the game, and you'll learn it just little by little about what these different things that you can't afford to lose. Because it's possible that the whole thing goes down. Because it's possible that the whole thing goes down, right? And cryptocurrency and smart contracts and blockchain turn out to be a dead technology. I very much doubt it, but it's possible, okay? And you're going to have a lot of swings. So don't put more in here. I would not use this as like, this is what I'm going to do with my retirement, or I'm going to depend on this for my kids' college. This should be like a side thing that if things go well, you're going to earn a little bit extra, but otherwise, it's going to give you a practical introduction to some of these technologies that may be the next big thing 5 to 20 years from now that a lot of our economic and social system run off of. Okay. So last thing, really, now that things are becoming more popular, that people are investing more, you do have to pay tax on this. You have to keep track on it, of it. And it can be very complicated when you're moving money from, US dollar into some kind of cryptocurrency, and then you move it over to Exodus, and maybe you make 30 trades throughout the year. Well, how much did you make or lose? And is it short-term capital gains or long-term, or is it all going to be taxed as this if the IRS changes their mind about is it an investment or is it a commodity or is it a currency, right? And so I personally have used this. It worked beautifully this past year, but you can import all of your stuff from all these different things into here, regardless of what you want to use. And then it will organize and produce like what all your transactions were and what the tax ramifications of that are. If you do use a tax preparer that's pretty progressive, then you have to pay for it personally, and it's not that expensive, but you can send them the results and they can integrate it into your taxes like boom. Like every tax professional should use something like this because it doesn't cost them anything, and really the cost is minimal. It might take something that would have taken you, 2 to 10 hours, and they charge you like $50 for it or something like that, right? And so that's like awesome. Use of your or non-use of your time, pay money for this type of time, and then you didn't make any mistakes, and you've got it documented way better as well too. So that's my overview. I really, wanted you to see that, hey, this is an important thing going on. I think it will make a big difference in the world. I think a lot of the companies that you own in your regular portfolios and retirement accounts, et cetera, are going to have more and more of this as you go on. So you don't necessarily need to get into it yourself, but it is an important thing to understand. And if you did want to learn more about it, it is a good subject to learn more about. And if you want to invest some conservatively, not just remember it as a speculative investment. I think I've shown you a little bit of the basics, but again, you do your own due diligence. You might find a way that you like to interact or do things better. So thanks so much for tuning in to another one of our broadcasts. Join us next week for our live guests. We're going to do it remotely again because of COVID. Then the week after that, we're going to have our book review on Genghis Khan. So hope you guys are doing well, staying healthy. Look forward to catching up with you or seeing you in person sometime when we get a vaccine or things get better. Otherwise, have a great weekend, and thanks so much for tuning in again.